Hello, everyone, and welcome to the Unlock live stream. We have little Pickles back here. He blends in with his bed. You can't even see him, but he's here. He wants to learn all about hard money lending. And so we have with us today a very special guest, someone that I talk to on a very regular basis, working with a lot of our loans. We have Miss Kylie with MM Lending.
Hey.
So today,
Thanks for having me, Jessie. And Pickles will lend to you anytime.
Yes. So we are going to talk about today processes, timelines, rates, terms, everything that you guys need in order to get set up with Kylie, working with Kylie. But first, I want to just kind of share my personal experience working with them, and she doesn't know I'm about to do this. So we started working with MM. When did you guys hit the scene here in Columbus?
The end of 23, beginning of 24.
Okay. So year and a half,
Yeah.
A little less. Yeah. A year and a half, they have been here in the Columbus market. Prior to that, I was using a nationwide hard money lender who I still highly recommend. But since moving to MM Lending, my business has gotten so much easier and so much less stressful. I know exactly what to expect. I know exactly what types of loans they'll do. There's really no pushback or headaches or anything like that. So she has just been an incredible resource on our team, really, to help me grow my business. So Ms. Kylie, if you want to introduce yourself, tell us a little bit about you, how you got here, and then we can get into MM.
All right. Yeah, I am Kylie. I've been with MM Lending for 2 years now. So I got started with them because they funded a flip that I did with my husband and business partner in COVID times. And
good old days.
Yeah, it's pretty exciting. Didn't know much. And I was also managing Airbnbs for Miss Wendy Kays, who works here at MM Lending. So yeah, I had used them before. And when they offered me a spot here, I was ready and excited. And it's been fun ever since. Yeah. So.
Yeah, awesome. And so what is your role? You're an account rep, or what's the official?
That's a great question. Still workshopping that 2 years in, but right now, like business development. So we are a small team. We are growing rapidly, but I help right now with all of the onboarding with new investors or new to MM Lending clients, help them navigate the underwriting process, get them pre-approved, help them know everything that they can expect for when they have the first deal, and really, just bring them on. So all new to MM Lending clients. And then, of course, a big part of my job is I travel a lot. I'm in Columbus a lot. So
yes.
Yeah.
Yes, in Columbus. She doesn't live here, but she loves us here in Columbus. And so tell everyone the states that you guys cover right now.
So right now we are in Kentucky, Indiana, and Ohio. I am hoping that we'll be expanding to a couple other states pretty soon, but right now those are our main markets.
Cool. Okay, Columbus is Ohio. Kentucky and Ohio and help me.
Kentucky, Indiana, and Ohio.
Thank you. Kentucky, Indiana, Ohio. And so if you guys are living elsewhere, but you're investing here, Kylie, you can work with out-of-state investors as well?
Absolutely. Yep.
Awesome.
And if you're an out-of-state investor and if you're with the Unlock group, be sure to tell me that, because that helps a lot. Then we know that you've got somebody helping you through your deals here.
So I have talked to dozens and dozens of hard money lenders. And from your point of view, what would you say makes MM different than all those other lenders out there?
Oh, that's a good question. I guess first thing would be we've been in business and funding deals for 20 years. Okay. That is incredibly rare in the hard money space. Number two, that we are regional. right now, the Louisville, Indianapolis, Columbus, Cincinnati markets. And of course, they have their nuances, but house-wise, structure-wise, it's similar. So the fact that we can lend on like our regional expertise there, and then hands down the service. And it's something that I don't like to really talk too much about it because it's just something that you experience. If you're using somebody else and you're happy with them, that's great. If not, I mean, the way that we're able to just kind of take it over from you, get it closed on time, you can be sure of that. And then funding draws on the same day. And you can really get a hold of anybody that you need to extremely quickly.
Yeah. Kylie will text me if they need something, like personal text. You can get a hold of anyone in the office reply to an email within the hour. Like, yeah, very good. You can hear her phone going crazy. I'm sure it never stops. Yeah, you're good. Okay, so let's actually talk through, we're getting a lot in the comments. Matt saying, ooh, MM's the best. We have Lizzie saying, are you the boss babe, owner, CEO?
I'll take boss babe. No, not the owner or CEO.
The official boss babe. So yeah, lots of love in the comments. And so why don't you tell us, if someone's listening and they're like, hey, I want to get in on this, what would be the first step with connecting with MM?
You can just shoot me a text or call me or send me an email and I will definitely follow up with you. Whatever's easiest, really. I'll answer all forms of communication that way. I don't have a preference there. If it is on the weekends, then I would prefer a text or phone call. That'll be faster than email. But yeah, just give me a call. If I'm on the phone, which I am often, then I'll just give you a call right back. So
yeah. Yep. Super good. And so, yeah, Lizzie just connected. We have a link here to connect with Lizzie. So oh my God, am I okay today? We have a link from Lizzie to connect with Kylie and this will connect you immediately, email, phone, all that business. So that is here in the comments. If you're watching on YouTube or watching on replay, it will be in the link in the description. So that's all there. We'll connect you. And then they really need to kind of send some information over preliminarily before a deal comes through. What kind of documents would you need from a new borrower?
So first, definitely hop on a call because like I said, it's my job to help with that underwriting process. So sometimes if you just send over the documents, they don't understand, oh, but you've been a realtor for 10 years, or you've invested in commercial properties, or you've got, rentals in California, but not Ohio. So I just want to make sure that I speak with somebody and we get all of that. Because all of that is experience. It's going to help. It might not check the underwriter's box, but it definitely helps. So then once you are ready to just submit the application, we have a 1.5-page application. We get that back with a bank statement for proof of funds, ID, and your most recent tax return. So okay. Right now, I am in the process. We got a lot of moving parts happening, a lot of good things happening
I've
here.
Heard some behind the scenes that you're not quite ready to announce. We're going to have to bring you back in a few months.
Definitely. But one of my biggest initiatives is getting that easier just online. So I can just send you that link and you can just fill that out. So we should have that very soon.
Okay, awesome. So when you're saying you need the bank statements for reserves, how much reserves are you looking for?
So it depends. We do an experience qualification or a financial qualification. So if somebody is a brand new investor, they're getting approved strictly on their financial qualifications. That is pretty much your credit score and your available cash is what they're going to be looking at. So you want to show that you have as much as possible. So business accounts, personal accounts, investments, stock portfolios. If you have a HELOC on your primary residence, that counts. Some retirement accounts, any of that, I would just send. All we need is the most recent statement. Yeah. We don't care about seasoning. If you just deposited 15 grand in there, that's fine. Send me a statement and a screenshot. But typically they are looking for around $50,000. And okay. that fluctuates as markets fluctuate. But I would say brand new investor between all of those different accounts, around 50,000.
Okay, 50K. And you guys, if you bought your house a few years ago and you've got a HELOC on that, I'm sure you can show it with, one. Yeah, perfect.
Yeah.
So even if you're like, Jessie, I don't have 50K, you probably have 50K somewhere that you may not know that a lender would allow you to count, right? So equity in your home, that's a great example. So that's really cool. And you said you could qualify either on financial or experience. Tell me about the experience.
So if you have experience, we're going to count that as about, I would say 2 or more renovations. So whether that is a flip or you renovated it and did the BRRRR method, we're really looking for rehab experience where you have purchased an investment property, you're on title, you manage the rehab, and then you got it rented, sold, or refinanced. So I would say 2 in the last 3, sometimes we can go up to 5 years on that. If you have in-market experience, even better. So oftentimes somebody has like 1 recently, maybe they had more a few years back, but and so we do like a mix of financial and experience qualification on that. Yeah, and if there's a problem, when it's an experience qualification, then you just need to show enough cash to be able to get deals done. I would say that typically that is around $25,000 for just to have for reserves and contingency and all of that. But yeah, if somebody's like, I don't have the 50K, I mean, yeah, just talk with me. We'll figure something out. And when you're getting pre-approved, they're looking at whoever is on the LLC. So if it's you and a business partner, they're taking the best of both worlds. Like your credit's good, yours is bad, you have cash, you don't, and then they're just putting it together. So
I love that. And so you guys, if you have a couple deals under your belt and you don't have 50K, they may be looking for a little bit less. And I love that because it aligns with what I've been saying for years. Like all these gurus out there telling you, oh, come buy real estate with none of your own money. It's possible. It's advanced. It is possible, but it is advanced. I need money to buy real estate. Your lender wants to see that you have money to buy real estate. It is incredibly risky to buy real estate with absolutely no money, like near impossible. So if someone's out there telling you that, listen to me, listen to the lender. Like they do want to see some cash. It's probably not as much as you think. I don't want to say $25,000 is not a lot of money because, I mean, that is. At the same time, if you're in real estate, it's not a lot of money. Like that is really a very reasonable amount of reserves that a lender wants to see. I've heard, 2-3 times that in reserves, like pretty easily from other lenders. So,
yeah,
cool.
We're just making sure that you are able to, especially if you're new, do your project. There's going to be surprises no matter what along the way. And we always say that experience is a way to, you've already made those mistakes or have encountered those surprises. And then the other way to fix issues like that is cash. So you want to make sure that if something comes up that you're able to do that while still keeping your lights on and feeding your family. Like we don't want anybody in a bad position.
Right. Love that. Love that. And everything I'm hearing, y'all, if you hear Kylie say, well, we can work with you here and we can work with you here. This is relationship banking, period, flat out. They want to get to know you, get to know your business, and they're going to work with you based on that relationship. You don't get that a whole lot of places.
Yeah, that's true.
Yeah, cool. Okay, so someone's pre-approved. They're looking at deals. They're ready to make an offer. What needs to happen once we're in contract? Say we make an offer, we get it accepted. What happens right after that?
So you would just send us the purchase agreement and the rehab scope and budget form. We have our own form that we do have you fill out. And as soon as we have those 2 things, we can start moving on it. So we would close from then in 7 to 10 days upon that.
7 to 10 days. But what could you do less?
Yeah,
don't.
We could. It depends. It definitely depends on the property. If we're doing now, we do get right now. We are doing an appraisal. So we work with the same appraiser in each market so that they're able to drop everything and get that to us. Ideally, they can get inside the property. If they can't, they can use or do what we call exterior only or drive by and use the interior photos to get that. So depending on the market, if you've got a property that is in just outside, like in Columbus, like in Marion, Ohio, or outside there, it might be a little bit slower. Still the 7 to 10 day mark, but if you come and I need to close on Wednesday, it's going to be depending on where it is.
Right.
But yes, we have made exceptions.
I am well aware. Yes, thank you. So what I'm hearing is, and you guys, if you're new to real estate, I want to really call out this point. We as investors are able to make lowball or, pretty low offers because of a trade-off. I'm able to close in 7 days from a seller's point of view, especially if it's a distressed seller and they just want this property off their plate. They are done with it. And you tell them this can be over 7 days from now or 10 days from now. That is motivating. And so you may get that offer that if you're coming in with a 30-day close and you're 20K under asking, that's not very sexy, just flat out. But if you're 20K under asking and you can get this off their plate in 7 days, that's a lot different mindset from the seller's point of view. So having someone on your team, on the lender position, that can make that happen is going to let you get more offers accepted. We're not just doing this to go fast because we want to go fast. It's because it's desirable for the seller.
Yeah, absolutely.
So, yeah, cool. Okay, so I see some questions coming through in the comments. Y'all keep it going. We will definitely hit all those. I'm going to kind of stick chronologically. So we have a property under contract. We submit the application. We're approved. We're getting to the closing table. What happens at closing or right after?
So we would send you your, you would have all your preliminary loan terms based off of your numbers and off of your ARV. And then that's when we go ahead and order the appraisal. As soon as we get that ARV back, we would send you final loan terms based on that, because we're only looking at loan to value, not loan to cost. So if your ARV increases, we're able to lend more. Decreases a little bit less, but I would say most investors it usually comes back what they think. They've run the comps and taken a look at it. So as soon as we have that, we've got clear title and an appraisal, we're good to close. We don't attend the closings. We will coordinate with title, make sure that all is good there. And that's pretty much it.
Cool.
Then you get going.
So we sign, you fund, seller gets their money, we get keys, and we are off to the races. We're getting our project done. Talk me through the draw process.
Yeah, so we fund draws on a line item completion basis. So that exact same form that you filled out in the beginning, that is what the ARV is based on. That's what we're going to use for our draws. So whatever you budget there, that's what we're committed to funding. So if you put in the line item for demo and you budget $4,000, as soon as that demo is completed, you can just send us some photos or a video, whatever's easiest, and show us that it's done. And we're going to fund you that $4,000. So if it actually ended up costing you $3,000, we're going to fund you the $4,000. If it ended up costing you $5,000, we're going to fund you the $4,000. So every project, some things you have to work out on the back end there. We do have a line item that is for contingency that I highly recommend people use, and you can pull from that at any time. So, and also this is in phases. When you're ready to make a draw, you're not just pulling for one item, you're going to pull demo, siding, a new fence, and then it tallies it up. And we fund draws on the same day. We did all of the legwork with the appraisal. So now just shoot us a photo and we see it's done, and that's fine.
Y'all, I don't know if you understand the value in a same day draw, because you know who, like, someone's standing there who just completed the work, contractor saying, hey, I did what I was supposed to do. Where's my money? Sorry, he's very sitting there saying, hey, I did my part. Where's my money? And I'm able to go to my lender. And, they're not saying, where's my money? Like stiff arm or something, like typically, yeah, like Bob said, they're 4 or 5 days, but I can get them paid the same day. And so that makes my contractors happy. And you see how this is like all working together. So the seller's happy, the contractor's happy because of speed. Speed keeps a lot of people happy.
Yeah.
Cool. So how much would a draw cost? Because like you said, we want to tally these up. We're not doing line by line. That would be crazy because there is a cost associated.
Yeah. So we used to not have a cost because there's no inspection. So it would make sense that you couldn't. But then, it got abused pretty quickly with I installed, this light fixture. Can you send me $90 for that? So we do have a fee to limit that. $175 draw fee per draw. It doesn't come out of your rehab funds. It's put on the back end at the payoff. Part of something that we're also working on with our loyalty program is like, once we know you're not going to abuse that. We've done a few deals. Like we could waive the first 2 draw fees, 3 for you in the future. So
interesting.
Yes.
That is new information that I will definitely be taking you up on.
Absolutely.
Yeah. So y'all hear Bob saying he works with some lenders that are 4 to 5 days on a turnaround from the time the draw is called and $295 fee. So it's like a much different experience. He was also asking, do you lend in Michigan?
Not yet, but that is closer. So that could potentially be one of our next stops for sure.
Okay, cool. All right. So then draw happens and our project's complete. We go to call the payoff because we're refinancing it. Pretty simple. I mean, I don't even have any questions about it. It's so simple. You guys calculate the payoff and send it to title, and it's part of my closing package. And then my loan's done and we move on to the next one.
Absolutely. Yep. And hopefully in a few months, I don't want to get too ahead of myself, but I have a lot of hopes. We are working hard over here, but like a borrower portal. We don't have that right now to be able to submit that. But I mean, Wendy is like lightning speed anyway. So
she's very fast.
Yeah, but we are still going to work on that as well. But I guess all we missed, built-in interest is another thing to keep cash in your pocket to help you speed up and definitely scale. We've had people, it might not make too much of a difference on 1, 2 loans, but once you're doing like 5 loans at a time and each month that interest payment is coming out of your bank account at the first of the month, like now you're down thousands of dollars. So we have had people that really like that perk. So we can build in up to 6 months of interest costs into your loan.
So let's talk about, because I want to explain that further, but some context is your rate and your points are always the same, which I think is pretty cool because
that's changing. Yeah.
Is it changing?
Yeah.
Now tell us what it is right now.
Right now, it's more of what we're seeing out there with all of the competition, that it's kind of depending on that pre-approval. It's getting, rates are in the 11s, but then that depends on the points. We're between 1 and 2. So to give you, like, to say you would definitely be at this, we kind of have a little less of that right now. Okay. But instead we're working on that progression model. Like, let's get you in at this, let's do 2 together. And then this is where you can be, whether that's reduced rates, reduced fees, higher loan to value, like still kind of workshopping that, but it's because you should be rewarded, for the more that you do. So we're trying to trying to figure that out. So we are moving away from just the standard everybody one size fits all into kind of more tailored rates for people.
Okay. So I just, for one point of reference, can you share what it was on the one size fits all?
Yeah, on the one size fits all, it was 12 and 1. Whether you had done 10 flips or, well, some was 12 and 1.5, but yeah, it was just that across the board. And we defer the point to the back end as well. So you're not bringing that to closing. You're not paying that as a part of those fees. So as much as we can push to the back end.
When you told me that for the first time, like, a year and a half ago, I think like literally my jaw dropped, because I have never heard of a lender who will let you pay your points on the back end. And typically, so a point is equal to 1% of the loan. If you're borrowing $100,000, that's $1,000. And typically lenders are collecting that up front. It's kind of part of their fee. They, pay their rep, or really they just want to get paid up front, right? We all do. Yeah. But MM is actually willing to let you pay that at the time of payoff. So whether you sell it, refinance it, whatever it is, you're paying that point on the back end, not on the front. So it's less money out of your pocket in day one.
Yes.
So that's pretty cool. And then tell us a little bit more about how you could actually build in that interest.
Yeah, so it all is going to be dependent on that loan to value. But if somebody is at that max loan to value of 75%, that means we can lend up to 75% of the after repair value. Yeah. And then when we're building out the loan, we're always trying to fund the 90% of the purchase. So we do like the investor to have 10% down.
Okay.
We fund 100% of the rehab costs. And we build up to 6 months of interest. Now, if that loan to value, with the full 6 months, we exceed that 75%, then we would build in whatever we could. So maybe it's 3 months and you don't make a payment until month 4. Whatever we can fit in there, we will try to do.
Yeah.
There's no prepayment penalty. There's no minimum interest. You could pay the loan off the next day if you want. So even if we build in those 6 months of interest, if you get the project flipped and sold, let's say on month 4, then we would refund you those additional 2 months of built-in interest at the
on the payoff. Yeah,
correct. So it's really just to help with out-of-pocket costs.
Yeah, and so if you're buying at a steep enough discount where your purchase, rehab combined is under 75% of what the property will appraise for, the after repair value, say you're all in for 70%, you may be able to build in all of your interest payments where you are not paying a penny until the time of refinance, which is pretty dang cool. So
now the loan term is 12 months. So you do have 12 months to get it done, but yes, the interest up to 6 months.
Up to 6. Awesome. Well, can you think of anything I've missed? I think this has been pretty thorough.
Yeah, I think we covered it.
We have some questions in the chat, which is awesome. So is the appraisal number they provide the current value or the ARV? This is from the appraiser.
Oh, so they provide us with it's an ARV appraisal. They'll run the comps, do everything based on the ARV to determine the ARV. But we do ask for their opinion of the as-is value as well.
Yep. So every time we get an appraisal done through MM, it comes with, the ARV is the main number, but it does have an estimated current value as well. And so that helps you, if that's coming in at 90 and I have it under contract for 80, I'm like, great, cool. I have 10K in equity built in right there. And so those two numbers together both tell a story. Bob is asking, so what's the seasoning period for owning a property? This one seasoning would be set by the DSCR lender. They want to see how long you've owned the property or how long you have had it rented. Seasoning can mean two different things depending on how the lender defines it. So you want to ask that. but it actually would not have anything to do with your hard money lender. It would be based on the DSCR lender's seasoning requirements.
Right. We are working on potentially a DSCR program, but yeah, right now we don't do DSCR, just the short-term stuff. From a lot of people that I talk to, I mean, Jessie, you would know a lot better, but if you purchase it with hard money, then the seasoning period, from what I understand, is often around 3 months, right?
3 months is super.
Yeah. And then, but if you buy it with cash, 6 months, right?
Yeah. So if you own it free and clear, the seasoning is often longer. Yeah. Which is, if you really look, if you guys really dig into what the wealthy, like the truly wealthy in this country and the world are doing, it is all leverage. No one is using their own money for anything. And so if you think like, they'll get the wealthy will get a line of credit against a business and go out and buy a personal home. Like that's how they're buying stuff. So everyone's using other people's money, and banks know that. So it's actually incentivized to use someone else's money. Like you get better terms when you're using lending. And what's his Dave Ramsey? Dave Ramsey can kick rocks.
Lizzie probably has something to say about that.
No, Lizzie's converted. She is fully converted. So, all right. Well, like I said, we have the link shared. We can post it again to connect with Kylie. There's, tons of other people in the chat. Dakota's hopped in, said, we love MM. They're just fantastic. I can't say enough good things, and have really changed my business in a lot of ways. So highly recommend. Yeah, highly recommend. And if you guys are ever in Columbus and you want to come to a coin meeting, Kylie makes the drive up from Kentucky for a lot of those, so you can meet her in person.
Absolutely. And if you're out of market, I mean, I'm sure Jessie can refer you to some other people, but if you're looking for somebody else, or if we can't do it, or it's not a good fit, I will always try to put you, with somebody else that can get it done.
Awesome. Well, very cool. We will have contact info up, and thank you so much for your time.
All right. Thank you, guys.
See ya.
See ya.